Hi, everyone. I'm Christine Kopr with your monthly market update for the month of October. But really, we're talking about the end of September numbers. Now, guys, last month, if you tuned in and you looked at some of the stats, we were really focusing on Vancouver East. The real estate board hasn't produced those stats quite yet. So I'll be recording something separate on that just as a follow up. But I did have a look. Listings, for example, for detached houses in Vancouver East are sitting at 606 listings with 53 sales in the last 30 days, putting us at 11.4 months of inventory. We're definitely sitting in a buyer's market for East Van detached, particularly in that entry level segment. So for those of you who have thought about making that upgrade, particularly if you're in a townhouse, because that townhouse segment seems to be chugging along quite well, this might be your chance to make that jump, especially with where interest rates are today and how they've changed dramatically over the last few weeks. With that, we're going to do a really high level overview of market stats, changes in the mortgage industry as well that are up and coming. Great news for anyone that existing mortgage or first time home buyers, or those of you that are just looking to get into the market. So let's roll right into that right now. Okay, for those of you that tune in every month, this is our high level update on the real estate market from Whistler all the way to Maple Ridge. So this is a overview of what's happening in the real estate market right now. We are going to get more specific in a future video once all the reports are out and we're able to record that segment for you. So make sure you like and subscribe to my newsletter so you receive that information, as well as to YouTube and Instagram for when that information comes out. Okay, so let's get to it. 1,852 sales. That's down 3.8% year over year and 2.7% month over month. It's also 26% below the 10-year average. So sales have been kind of sluggish around this 25% below the 10-year average. This has been hanging around for a while now. We were hoping to see a little bit more activity as we started to see those interest rates start to decrease. And we've now had 3 interest rate decreases, but that hasn't seemed to spur that amount of activity in the market yet. Now, we shall see what happens in the fall. We have some announcements we're going to talk about with mortgage rule changes, which could help support the market, as well as we're anticipating another interest rate announcement on October 23rd from the Bank of Canada. And sometimes these changes take some time to be felt in the marketplace. So perhaps this is going to be a sluggish fall and might shape up to a better spring. But lo and behold, if you've been sitting on the sidelines, this is definitely the time to be looking at Vancouver's real estate market, generally speaking, because again, this is the time where there aren't so many buyers and it can be a great time to negotiate and buy that home that you've been looking for. So jumping over to new listings, 6,144 new listings came on in the month of September. Typical to have slightly higher listings this time of year. It is the fall, and this is our second busiest market of the year. Tapers off kind of mid-November and then very quiet in December. Now, month over month, that was a 50% increase in new listings coming on the market. Year over year, we have 13% more listings on the market, and we are 17% above the 10-year average in terms of the amount of homes that's available. So yes, we have more inventory coming on the market, something that the general buyer population was potentially complaining about for the last 5+ years, just lack of inventory, not a lot of inventory. And we're finally getting that inventory and that selection, thinking that we'd see some more players come into the market. However, we can see that the sales are just not keeping up with this new inventory. So perhaps inventory was never part of the issue. Although I can say that when you look at the entry-level houses, for example, they're not always the beautiful, perfect model homes that people are looking for. So while there is more inventory, it's not always the nicest inventory, and therefore sometimes just gets passed over and isn't really that interesting to buyers. Total available listings, so active listings, we're sitting at 14,932 listings. That's up 8% month over month. So a big jump from August. Not too surprising because obviously August is the summertime and it's quieter. Up 31% year over year as well. So more listings than we had last year at this time. And we're about 25% above their 10-year average. So yes, we definitely have more inventory. So if you couldn't find what you're looking for before, this is definitely the opportunity to start looking. And we have had a few more buyers starting to show up recently, a few more calls, and that makes a lot of sense. Sellers, obviously, you have a lot more competition and you can't get lazy when it comes to marketing and pricing and preparing your home. Overall, as I predicted, we are heading into buyer's market territory. 4 to 6 months of inventory is considered a balanced market. That's when the amount of homes available compared to the amount of demand is in a balanced market, not favoring buyers or sellers. Anything above 6 months of inventory is considered a buyer's market. There's just more inventory accumulating than there is demand. And as we get that accumulation of inventory, there's more downward pressure on prices. It's simple supply and demand. 4 months and below is considered that seller's market territory where the market's really hot, not enough inventory for the amount of demand at that time in the market. So we've crept up. You can see it over this last part of the year. The spring was a bit better. We had some interest rate decreases, yet you can see slowly but surely the months of inventory is creeping up. And it's not surprising because the sales are somewhat anemic compared to the healthy amount of inventory coming on our market right now. So it's also impacting your benchmark price. As you can see, we're sitting at 1.179 is the benchmark, down from 1.96 the month before, or down 1.4% from the month previous, and down 1.8% year over year. So we're starting to see a lot more of that downward pressure on pricing in the more recent months than versus year over year. You're starting to see that happen now. So again, if you're thinking about getting into the market, this could be an opportune time to start talking to your mortgage broker, start connecting with your realtor like myself, and let's get you out there looking at properties so you can get some sense of the market rather than being in a competitive market scenario, which could also come because markets do change, and when they do, they change sometimes quite quickly. Quick look at Metro Vancouver detached home sales are down 10% year over year. Your benchmark price is sitting just over $2 million, with your benchmark price up 0.5% year over year. But as you can see, we're starting to have 1.3% decrease month over month. So a lot of the gains happened a year ago, and we're starting to give away those gains now. Now's the time when the downward pressure is on those prices. Sales to listings ratio, it's kind of like our months of inventory. 12% and below is a buyer's market. 21% and above is a seller's market. We're definitely in that buyer's market territory overall. Of course, we need to get into your particular market segment. So reach out to me if you want specific information or data for your particular market and product type. Townhomes sales are up 7.5% year over year, sitting at just under 1.1 million for your benchmark price. Benchmark price is down 0.5% year over year and down 1.8% month over month. So again, you can see we're giving away those gains now as opposed to a year ago. Sales to actives are sitting in this balanced market territory, but oddly enough, we're seeing that downward pressure on pricing. Attached condos sales are down 5% year over year. Benchmark price is $762. Benchmark price is down 0.8% year over year, and your benchmark is down month over month 0.8%. So again, we're seeing that turnover or rollover now, as I predicted earlier this year. Sales to actives ratio sitting at 15%. So again, in the balanced market, but heading towards that buyer's market territory at 12% and below. But we are seeing some downward pressure on prices, regardless of where the sales to actives ratio is landing. And part of that has to just do with it takes time for these market conditions to roll out and be felt through the market segments. And of course, not all segments are acting the same, nor are all locations acting the same. Okay, so we will report on some more specific data once the reports come out from the real estate board. But for now, we're going to talk about the recent Canadian mortgage rule changes. So some big announcements were made recently. Music to anyone's ears with a uninsured mortgage. That is anyone that has put more than 20% down. This is a new change that's going to be coming up November 21st, where you will no longer have to be stress tested to switch to a new mortgage provider. For the last few years, owners with these mortgages were stuck with their lenders because they were not able to qualify with a new lender because of the stress test, therefore trapping them with their existing lender and not making the mortgage market very competitive. And so this is a new change. This change was available for insured mortgages for folks that had put less than 20% down, but now this is available to anybody with a mortgage as of November 21st. This is a big deal, especially for those of you that are coming up to your renewals. So make sure you reach out to your mortgage broker. The other big piece of news, as the insured mortgage price cap has increased from 1 million to 1.5 million. You may have seen some of my videos on this. This is also Fantastic news. That means that if you have less than 20% down, you can buy a property up to 1.5 million. There's a certain ratio up to certain threshold levels, and you can save a significant amount of money up front, over $100,000, for example, by being able to put 7% down on a $1.5 million mortgage approximately. New insured mortgage refinancing product for adding secondary suites is coming up. That's something new that was recently announced. There's also extended amortizations for first-time home buyers or any purchasers that are looking to buy resale properties, being able to extend those amortizations up to 30 years. The math on this is pretty significant. So you have to take a look at this. If you're a first-time home buyer or purchasing new construction, it makes a lot of sense to consider these 30-year amortizations, which then make your monthly mortgage payment smaller and more affordable, which not only allows you to qualify for more mortgages and or a higher price point, but of course it makes it all more affordable. And of course, a new mortgage rule allowing homeowners to refinance at a lower rate without qualifying for a new mortgage, kind of coming back up to this OSFI elimination of the stress test. So this is all fantastic news for people thinking about getting into the market or existing mortgage holders. And we're going to take a look at what interest rates are doing right now, because there's been some interesting changes, and I have a public service announcement for anybody with a mortgage, especially if you've refinanced or purchased property in the last 6 months or have a mortgage rate of about 5.5% or more. We're going to look at that next, but just 1 second. Let's take a look at where rates are now, which will help you understand why you want to listen to that next segment. Okay, so in September, the 5-year government bond dropped down to 2.7%. Now, I know we always talk about the Bank of Canada and their interest rates and this interest rate announcement, because that impacts the variable interest rates for your variable mortgage products or your home line of credit. But the 5-year Canada bond impacts your fixed rates, which a lot of people have moved to because, quite frankly, they are cheaper than the variable rates right now. And there's some risks involved there, which you need to talk with your mortgage broker about, not your bank, but your broker. So you talk to more than one party and are able to see various products. But anyways, point being is the 5-year bond had dropped down to 2.7%. Now, fixed rate mortgages are slightly higher than this by a couple points, but it shows you can see that not too long ago, we were pretty high at 3.8%. Now, this was at the beginning of September. We've had a little bit of a bounce up here. You can see we've jumped up back to about 3%, partly because of what's happening in the Middle East, partly because there was a very strong jobs number release that came out from the US and just other factors. So there has been a little bit of tightening up in the bond market, but still much better than when we were even 6 months ago. Makes quite a significant difference. In fact, I'll just move myself here. It was just almost 4% 6 months ago. This is impacting rates, and let's see how far we've come. So fall of 2023, this time last year, borrowers were taking fixed rates at about 6% to 6.6. Variables were sitting at 6.7 to 7.2. Now, in the fall of 2024, you're looking at fixed rate mortgages, looking at options at about 4.19 to 4.89. What a significant difference to just 6 months ago, and your variable rate option sitting at 5.35 to 5.75 approximately. These definitely change depending on your particular file, owner occupied, rental, etc. But you can see that there has been a significant change. And of course, affordability is a big part of this low sales activity in our real estate market, and probably also concerns about the overall economy. Have definitely become more affordable. And here is my public service announcement. If we have not connected recently, I am trying to connect with all of my clients to let them know about this in case you can save money, because of course everyone refinances and renews at different times. I know who my buyers are, etc., but you never know what's going on in even if my buyers bought 4 years ago, they could be deciding to renew or have renewed recently. Is now the time to refinance? Look, if you have a fixed rate above 5.5% in the last 2 years, you should contact your mortgage broker. The reason why is there are still very high posted rates, which will lead to lower penalties for when you have to pay that penalty for breaking your mortgage. And even with breaking the mortgage, in some of these circumstances, you have to do the math. In some of these circumstances, there is a significant savings, even if you just recently refinanced or purchased in the last 6 months. This is very important. You can roll in your penalties and secure rates in the mid 4s. That's very possible. In some cases, I've heard of even 3.99%, but I mean, like it's like one in a million kind of thing. You can significantly reduce your monthly mortgage payments. I saw an example of over $800 a month savings. And in fact, actually like $1,400 a month savings. So this is a legitimate opportunity, but once the high posted rates start changing, the IRD or the interest rate differential, the penalties that are applied to refinancing or renewing these mortgages, the penalties will become too great and then it won't make any sense. So please, if this sounds like your situation, speak to your mortgage brokers so that you can save some money and have a better cash flow in your life because, people feel the pinch and or just want to improve their cash flow. And by the way, interest rate, you pay more principal with every mortgage payment. So you'll have a lower mortgage balance over time. And the point is that your bank is not going to call you. They are not going to tell you when these numbers make sense so that you break your existing mortgage and roll into a different one. Nada. So please, you can try your bank, but you could also talk to a mortgage broker who can speak to various lenders. They can speak to Scotia, they can speak to TD, etc. They can speak to credit unions. If this opportunity is for you, I highly recommend that you take advantage of it. Alrighty then, that's it for me today. I hope you enjoyed this market update. I look forward to doing some of those deeper dives. If you're looking for any specific information on the real estate market, please connect with me. Also, please make sure you like and subscribe on YouTube as well as on Instagram. And if you haven't already signed up for my email newsletter, because we do send out a lot of information via that route, and you'll be kept posted on information tidbits like this and more. With that, I'm Christine Kopr with Sotheby's Realty in Vancouver, BC, and I look forward to connecting with you. Have a great October.